Hello, everyone, and welcome to today's webinar featuring the TaxConnex team. Today, you'll hear all about strategies for managing a sales tax audit. My name is Liz Brigson, and I'm thrilled to be here as your host today. The webinars with TaxConnex are always dynamic. There's lots of questions. There's lots of great answers. They're action-packed and very relevant, so we're glad you're here. Just to keep things going in that spirit, I'd love to hear from you in the questions box if you want to write in and let us know where you're joining from. And I can see that Christy, who's joining us from Washington, already said hello early. So thanks, Christy, for joining us and logging in to be here and ready to get started. Latanya is joining from the Bahamas. Welcome. Katie from Wisconsin. Hello, Michael, who's in Long Island, says hi. Margaret in New York, New Jersey. Darren from Ohio. Welcome. Donna in Kentucky. Welcome to Angie in Cadillac, Michigan. Karen from Texas. Lisa, also from Washington State. Kendall, excited from Seattle. Toronto. Cora, hello, welcome. Hi, Kim in Florida. Donna in California. Thank you so much for writing in. And we really do hope just to keep the questions, keep the conversation going. So we're off to a great start. And hello also to Antonio from Miami. You can download the presentation slides from the GoToWebinar control panel. And these slides are very helpful for referencing, future reference. So make sure you save them. They also will be accessible from your Corsa dashboard. Today's webinar is 1 hour, so we'll launch 4 polling questions. You'll want to respond to at least 3, but hopefully all of them. And once you qualify for CPE credit, you'll be able to access your CPE certificate 1 hour after the conclusion of the program. If you have any questions, you're welcome to reach out to us at support@incorsa.com. And if you're on LinkedIn, I would love to connect with you, and I would highly recommend connecting with the TaxConnex team and following our speakers today, Jeff and Brian. You can see where in the world they are traveling, and they like to go around and meet you in person at the conferences, and it's just really fun to see their posts and the ways that they are having an impact in the accounting community. TaxConnex is your upsourced sales and use tax compliance solution. So if you have sales tax chaos, they can help you conquer that chaos. They can help you manage it for you, for your clients, and also just be an advisor and an expert. And they have some tools and technology that they can help with as well. So really thrilled to be joined by Jeff Meigs, who's a partner, and Brian Greer, who's a partner. These gentlemen know the sales tax space inside and out, and you'll see that in the presentation today. So Jeff, Brian, welcome. Thanks for being here, and I'll turn things over to you.
Yeah, it sounds great. Thank you very much, Liz. And I love the way that you kind of teed this up as an action-packed hour of time here. So I don't know if anyone's ever described sales tax audits as action-packed, but we'll see what we can do for everybody here. But definitely appreciate the questions. So we'll try to get to those as we go through the presentation here. And then we should have some time at the end as well if we have any left over. I'll give you guys a little bit of background on myself and Jeff and the business here in just a moment when Liz pulls up the first polling question. But just from an agenda perspective, I'll hit this kind of quick. But you know, it's always a question that we get, this first bullet point, in terms of, you know, why was I selected for an audit? We'll go through a few different reasons and events that seemingly lend to, I guess, a likelihood of being audited, but we'll talk about that a little bit. Also, just kind of talk through, you know, what can you do in advance of an audit? So kind of that pre-audit planning, how you can go about managing some of the risk within your business. Then we'll really get more into the actual audit itself, how to manage the auditor, how to manage the audit. And then once you get some type of response back or assessment from the auditor, what are your options? How can you appeal it? How can you work through that audit to get to a resolution that's hopefully good for both parties? And, you know, what can you be doing proactively today, kind of with the idea that you're probably going to get audited at some point, and with that mindset, what can you be doing in advance of any type of audit happening? So Liz, I'll let you pull up the first poll question here, and then I'll provide a little bit more background on TaxConnex and Jeff and myself while the audience is responding to that.
All right, that sounds great. So here's our first polling question. In the next year, are any of the following, where sales tax due diligence may be required, a possibility for you or for your clients? So do you have plans, or do your clients have plans to sell the company, seek outside capital, acquire a new entity? Maybe these things aren't possible, or maybe you don't know, but go ahead and let us know. And Brian, let's hear from you.
Yeah, in terms of TaxConnex as a business, if you're not familiar with us, we do specialize in the sales tax area, and I kind of categorize our business into three primary areas. One being the consulting or advisory aspect of our business, and Jeff heads up that portion of the business for us. Specifically, we're helping companies not only deal with sales tax audits, but we're often getting pulled into discussions about where do I have nexus and where do I have taxable sales, and shouldn't I be collecting sales tax? So that kind of fits into that consulting bucket or category of our business. The second piece of it is we provide a software solution that plugs into the accounting system or into the shopping cart that helps calculate the sales tax either at the checkout or when the invoice is created. And then we also have a compliance outsourcing service where really on an ongoing basis, we help manage sales tax for clients and prepare and file the returns, remit the payments, respond to notices. So our services kind of fit into those three primary categories. Jeff, specifically, I mentioned heads up our consulting practice. He comes at this through a couple of different lenses in terms of his background. One of those being a former state auditor with the state of North Carolina. Another lens is, working in industry. So he's got some time at General Electric, and then also working as a consultant here at TaxConnex and a couple of the big four firms as well. So I know he's got some great insight to share with the audience here. So I'll pause there for a second. I think the poll is ending, and then we can go ahead and get started, Liz.
Thank you. We went ahead and shared those results, and we can see that there are some activities coming up with our group today. And thanks everyone for responding and letting us know what type of activities might be coming up that would require some due diligence.
All right, so Jeff, you're up.
Thanks, Brian and Liz. And the title of this first slide, How and Why Are Companies Selected for Audit? There's probably a piece missing in that most of us would really like to know, and that is, when are we going to get selected for audit? Prior to this call starting, Liz was asking me if there's any tendencies that kind of we could expect in terms of times of year where audits are more prevalent. And there really isn't to any extent or any degree. But as I was thinking about that question and thinking about this particular slide and some of what Brian said, kind of teeing this up today, it made me think a little bit about, what are we here to really understand? What are we here to talk about today? And I thought, well, I wonder if the audience is going to feel like we're sort of fear mongers, just wanting to scare you into thinking that you need to do something right away. And the way I would describe it, and just to kind of elaborate on the when, is it kind of reminds me of car insurance or life insurance. I fully expect not to be dying tonight, and I actually don't expect to be in a car wreck tonight. But I know that the result of any of those two have dramatic effects on property or people. And so I just like to be planning ahead and prepared for that potential. In some cases, the inevitability. And I think that's probably the way to think about audits. And, a lot of times we talk to companies that come to us having not really implemented or instituted any sort of compliance mechanism around sales tax. And so they are nervous. They don't know what they don't know. but they do recognize that there's a need to comply. And particularly those companies that find themselves with a need to comply in a lot of different states, one of the first things that I'll tell them is, look, you're not going to get a rush of audits on your front doorstep in the next 6 months. That's just not going to happen. But we can't predict who might show up on your doorstep and when. So why might I be selected for audit is something that we can talk a little bit about from our experiences. The first item here is Nexus questionnaires. And I think more recently, those tend to kind of come about as a result of what we refer to as the Wayfair decision. And that's the economic nexus standard as it relates to sales and use tax. A lot of times when Brian and I present, we talk a great deal about nexus as sort of an initial step in this dialogue. We're not going to go into that today, but nexus is simply the requirement to comply with the laws of that state. If I have nexus, I need to comply. If I don't have nexus, I don't need to comply. Nexus doesn't necessarily mean just because I have it that there's a tax implication. It just simply means that I've got a presence in that state. Well, the Wayfair decision, with an economic nexus standard now in place across all the states are more adept at reaching out. They'll send what we refer to as nexus questionnaires, asking key questions about your activities, trying to determine or ascertain whether you should be registered and compliant if you're not already. Prior to technology, we used to tell clients 15 years ago to just ignore those requests. But states have gotten more robust in their abilities to manage these things, and they will send out a second notice. You will get a third notice, and eventually you'll get a potential audit or a knock at the door. So nexus questionnaires is a fairly common occurrence, or more common today than they have been in the past. Historically, when I talk about the likelihood of you being audited, it does tend to come from business-to-business transactions and the audits of other companies. So anytime an auditor comes in to assess the records and activities of a business, they're not just there to assess that company, they're also evaluating a variety of other companies who have sold to that business. And so they're looking at invoices, they're kind of getting a sense for whether a company's activities might require them to be in compliance, and they're evaluating the level or degree of compliance as is presented on their invoicing. Are they charging the right tax rate? Are they taxing the right products and services? So business-to-business transactions and audit identified through that process are very common. And probably the biggest source of audits when I was an auditor with the state of North Carolina came about from those activities. Certainly, if you've gone through an audit and you've not come out of that audit faring very well, you had a major assessment or major gaps, it's probably safe to assume that there's likely another audit from that same jurisdiction in your future, maybe very near future. If you're a very large company, and particularly those companies that tend to have quite a diverse degree of operations within a state, they'll kind of fall into an audit cycle. So the largest of the largest companies are probably audited fairly regularly on a regular cyclical basis, every 3 to 4 years. From time to time, we will see circumstances that evolve through whether it be new legislation or some type of precedent-setting law or court case, where specific industries might be targeted. And when I say targeted, sometimes they're really intended to make sure there's a level playing field across the industry, so that one company who's really trying to comply and do the right thing is not unfairly disadvantaged by another company doing the wrong thing. And so sometimes when there's a sense that some of the industry is a little bit out of compliance or doesn't understand exactly how to apply the law to their specific business activities, sometimes the states will kind of zoom in and focus on a few of those industry companies. Disgruntled customer or employee. Most of the states have a hotline where either somebody that's disenfranchised after a transaction or believes a company or wants to assert that a company is doing something illegal around sales tax, they can make that representation to the states, and that could lead to an audit. A couple of stories I'll throw into this mix. We had a client a few years ago who had a CFO who was doing some not so savory things. There was some embezzlement activities going on, and he made representations to a number of states through nexus questionnaires that were inaccurate, intentionally so. And this particular person was identified as doing some criminal activities. He was fired. They brought in legal authorities, and it's happened that a few weeks after that, they got a call from a state wanting to conduct a sales tax audit. A few days later, they got another call. A few days later, they got another call. That was a very unique situation. It turned out that the gentleman took it upon himself to call all the states that he had already lied to on these nexus questionnaires and tell those states that this company was out of compliance and they needed to be audited. It turned out that it was definitely a problem they needed to get out in front of, and we ended up doing 34 voluntary disclosures across the remaining states. And then obviously the states have to kind of keep people honest, and so there is an element of random audits that are identified at the administration level and assigned out to field audit personnel.
So a couple of thoughts here. And first of all, I don't think I'm stealing a polling question later, but if you have been audited, it would be interesting to see in the questions box, like, what kind of triggered that or what generated that, to see if it matches up or aligns with what we described here. So feel free to submit those. That would just be interesting for us. And the second point, I will say the client that you referenced that had the rogue employee, they were a client after all of that happened.
Yes.
Not a client during that.
Yes.
They contacted us when the audit started to roll in and when the questions started getting asked.
Thank you for that clarification. That's accurate. So let's kind of jump from the possibilities of why we might be selected to audit to a scenario where we've received an audit notice. Typically, that notice is going to also outline the notice period or the exam period. What do we do in reaction to something like that? After we get over our anxiety and sort of freaking out over the fact that we don't know what's going to come next, one of the things I would say to you is these are very common. Despite the fact that they don't happen a lot to any individual company, there are audits going on at all times. There are massive audit programs across all these states. There's just so many companies out there that not all of them can be tapped for audit. And so it's not common that you will be audited, but the audit itself shouldn't be viewed any different than any other sort of customary review. Obviously, in any circumstance, we may have reason to believe that we're more at risk by the fact that we've been selected for audit. And so that sort of leads down a path of what should I be doing upon receiving that notice? And I think there's just some key areas that you want to familiarize yourself fairly quickly and in preparation for that first audit meeting. The primary area where most of the risk is going to really lie is obviously you've got to have a tax calculation process. This is assuming that you have Nexus and that there's a valid reason for being audited. So if you are leveraging a tax calculation engine or you've created something of your own, you just want to understand, are we mapping all of our products and product SKUs to the right categories such that those systems can be effective at identifying the true tax treatment as well as rates. You want to be able to exhibit to an auditor that you've got good records, that it's not just a haphazard thrown together pot of documents. And in today's world, it's really not paper, but electronic documents that are available for review. So you want to have a kind of a uniformed strategy around how to pull your data together and present it in a way that looks clean and professional. There is definitely, and we'll talk about this in some of the other slides today, but there's discretion that every auditor is using. Every auditor is different. There are really good auditors. There are auditors that lack some degree of competency, or at least aren't as competent as others. And you're going to find from time to time that you'll be challenged by the temperament or the approach of a specific auditor. But I do think providing them with some really clear understanding of the business model and the compliance process goes a long way to making them confident that anything else you tell them is going to be true. If I have got a mess of records and I can't really put my finger on any details, the storyline just doesn't line up with the video. And I think the other thing I would say is prepare yourself for that initial meeting in a way that you're able to articulate the business activities as well as the sales tax and use tax compliance activities. You can articulate those in a very clear and concise way. I like to say that fewer words are better, despite what you're going to experience here in this hour of listening to me talk. But in the audit scenario, it really is keep yourself focused and try to engage more in those areas where you feel most confident.
So, excuse me, Liz, second polling question, and I've got some responses and questions to talk about here too.
Yeah, that sounds great. Really appreciate everyone in the audience writing in to add their experience. It's really interesting to hear that. So here's our second polling question. Have you seen a change in the number of sales tax audits your company has experienced in the past 2 years?
Yeah, so while you guys have a chance to vote on that or answer that question, did get a couple of responses here in terms of audits and how people were identified. Looks like Maureen indicated that it was just kind of a random audit. Donna had an interesting one where it seemingly is based on a return that was filed, that there was something unusual or odd on the return that seemingly generated some type of inquiry or question. And one here from Jennifer that seems like it may have been an invoice that had something unusual on it. Maybe it was an audit of a customer and the auditor saw something on that invoice that raised a question in their minds that then they reached out to Jennifer. So, yeah.
Yeah, just to follow, I love those examples. And the one where you talked about the return preparation or the return presentation might have led to an audit. That's another great example. One of the scenarios that we do encounter with some of our clients is they will find that a customer they previously had assumed was taxable, months later comes to them with an exemption certificate and validates that that transaction should not have been taxed. And if it's a material amount of tax, sometimes the challenge can be trying to recover that tax back from the jurisdiction. And in a lot of cases, that's going to require an amended return or some type of claim for refund. And that amended return and claim for refund process, to the extent it's material, is a pretty high degree of certainty that you're going to get some questions, maybe a desk audit, but you will probably get some questions that could turn into a full-fledged audit.
Yeah, and one question here before you close everything out here, Liz, Darren had referenced and said that they had registered and started filing, and then shortly after received a Nexus questionnaire that led to an audit. It was more of a statement there, but I'll throw it to you, Jeff, in the form of a question, because it seems like we've seen a few states that have gotten real specific with this. And I don't know if one of these states is where Darren is talking about, but what are a couple of those states where we've seen that happen on a registration?
Yeah, and to give you a little bit of backdrop, a lot of times historically when companies would come to us and say, hey, I feel like I've got some issues, I need to comply, I'm not yet registered. and I need now to go ahead and get registered and start charging and collecting and remitting tax. To Brian's point, and maybe to that question or statement, there are really 3 states that stick out to me as states to be a little bit concerned about in terms of how you go about getting registered and how you start to comply in those states. And what I mean by saying that is that a lot of times if a company has been operating in a capacity that should have required registration, but they haven't been charging tax, the inclination is to go ahead and get registered prospectively, not to go back and try to clear up the prior periods. But in states like Washington, Utah, and Arizona, we're seeing those states more commonly come back to recent registrants and ask questions. Some of them ask those questions on the actual registration form, and those questions tend to focus on the economic nexus standards. So they're asking, what is your revenue for the last 2 or 3 years? How many transactions have you had in the last 2 to 3 years? And that is a gotcha scenario. You really have to hesitate doing anything prospectively in those states. And I think there'll just be more of those kind of scenarios piling up or happening across other states over time.
All right, so Liz, if you, I'm not sure if you've closed the poll there, but we'll move on to the next piece here. I love the questions.
Yeah, lots of questions coming in, lots of input. Love seeing that. And as far as recapping the polling question, looks like about half of our group says stay the same. More folks say increase than decrease.
Very good.
Yeah, so I think Brian talked a little bit about in the agenda, we want to talk about how do we get selected, kind of what to do in reaction to receiving an audit assessment. And this next 2 slides are going to really talk about how to manage or how to facilitate the audit itself. And there's a couple of things that happen early on in the audit process that you want to address. One is, more often than not, there are sample selection procedures that take place. The states are becoming more and more sophisticated in this regard. And so a lot of the states, especially the larger states, are instituting statistical sampling techniques. In a lot of those cases, the auditor actually brings in another resource to assist with setting the strata for a specific audit, and then initiating the calculated sample period or a sample selection. The audit sample process can present some opportunities. I'll tell you a bit of a story. We had a client that had massive quantities of records, a lot of detailed small transactions, and the records were such that it was very difficult to provide that degree of information to any auditor. And so it was commonplace, especially in large states like Illinois, Texas, and California. It was common those states would come in and say, we want to see 100% of your transaction volume for the last 3 years. Let's say it's a 36-month audit. This company historically has never provided that degree of information just because it took so much time and energy and resource to pull those transactions together. A lot of that had to do with the fact that they had multiple billing systems, and some of it had to do with the quality of the data. And so we had a scenario where, and this is going back a few years, but they had gone through an ERP change. This was in 2018, and the audit spanned 2016 to 2020, something like that. And we knew inherently that there were problems prior to that 2018 period, such that we wanted to do everything we could to avoid that being included in the scope. We didn't really have an easy way to try to manage through that or to mitigate that issue. And where we landed was we went to the auditor and said, look, our records are such that a lot of it was in Europe. We had to go to European resources to get the data pulled. And what we said to the auditor was, there's kind of 2 scenarios here. If you want all 4 periods, we're happy to provide that to you. It will take up to 4 to 6 months for us to pull that data for you. Or if you're open to looking at the last 2 years, we can get that data for you within the next week. And so we kind of influenced by not saying we couldn't provide data, but by articulating what the scenario would look like one way or the other. And they were incented to do the audit quicker. And so they gave us that break, and we were able to avoid those periods prior to 2018. So it was big. It was a big win under those conditions. It's an example. I don't mean to tell you that that's something you can do with any audit. It's just thinking through the scenarios and really understanding the business and the activities and the history gives you opportunity to maybe strategize and try to mitigate some of the exposure just through samples or audit sample setting. The other thing that I have tended to do throughout my career when we're managing audits for our clients is I like to throw a carrot out. I like to be able to at least present myself as being fully disclosing in the way of saying, hey, here's our process, here's how we do things. There are a couple of things that we worry about, or there's a scenario we had with a couple of circumstances in these sort of client situations that we believe may have exposed us. So we'd be looking for some guidance from you as the auditor to tell us how we should have managed those. And you're kind of giving them insight in a way that says, hey, we're trying to do the right thing, and we tried to do it in this particular scenario. We're not sure we did, but the auditor in some cases might look at scenarios like that and give grace to just the fact that you're trying to do the right thing. And then there's the obvious. You know, obviously you've been selected for audit. A lot of companies that sell to exempt entities or sell for resale find themselves lacking adequate documentation when it comes to exemption certificates. Another thing that you might be able to achieve, and this is particularly so if you sell to a lot of really large companies who are sophisticated and have sophisticated tax department, there's something we refer to as an XYZ letter. It's essentially an affidavit that we ask of any customer who we failed to charge tax to if they've been audited by the state or they've self-accrued and remitted use tax on whatever it is we sold them. And if they have been audited or they have self-accrued, we have this affidavit. It's a one-pager that just says, hey, we've already been audited or we've already self-accrued this tax and paid it. Usually the states are open to receiving that level of documentation to satisfy a particular transaction and remove it from the assessment. So managing the data, managing the history of the business and the processes is a piece of this equation. But as we've said a couple times now, auditors have discretion. And so managing the auditor is a big part of the equation as well. And what I mean by that is every auditor's got a different personality. Some are going to be more engaging than others. It's a wild card to know what you're going to end up with. So I tend to kind of default to, I'm going to treat the auditor with respect, regardless of any discrepancies that I find in their assessment or their positions or statements. It doesn't do me any good to have a full-blown argument with the auditor. I recognize, and we'll talk about this in a little bit, I recognize that there's another level of authority that I likely can lean on without a true final assessment. So I kind of have that in the back of my mind. The other thing is be consistent with the communication. Assign an auditor or assign an employee one-to-one with each auditor. Don't have multiple people being asked for data or information by the auditor. Don't give the auditor free rein to approach anybody in the business. Again, times have changed since I was an auditor. When I was an auditor, it was almost always on site. It was thumbing through paper. That's just not the way it works anymore. It's less and less common that the auditors even show up on site. A lot of times this is done electronically, and you never actually physically meet the auditor. But I still believe there's an opportunity to build some degree of rapport, and I think having consistent one-on-one connections with an auditor is critical. That way the messaging is always the same, or it's at least consistent. We don't have different people answering different questions in different ways. It kind of goes without saying that if you're going to assign one employee, you do want to limit the auditor's access to other people. Again, going back into ancient history, when I was in the Fred Flintstone era, you'd be put in an area of the business with a bunch of file cabinets, and you're thumbing through those file cabinets, and Joe or Mary are sitting just behind you doing their AP job. And it was always easy for me to just turn around and ask them a real basic question, always looking for some insight as to what they really did or how they really did it. So we always want to try to limit their ability to do that. The other thing that's happens in most audits is there's going to be questions that you don't like to answer or don't want to answer. This will be sounding a little bit like a sales pitch, but there is an advantage to having a third party represent you in managing the audit, because any question that comes at that person, they can say, I don't know, but let me go look into it. Let me check on it. I'll get you an answer. And it gives you an opportunity to absorb the question and evaluate whether or not we have a good answer, or if we need to structure an answer that makes for the best outcome. So one of the things that I like to do in this regard as well is when the auditor asks for data or records or information, I like to respond very quickly with some of the low-hanging fruit that isn't of any risk. And this goes to some of the data elements that you might get asked for under an audit as well. A lot of times they come in with a standardized sheet or list of questions or data elements that they want to get. They don't really need all of it. There are some key aspects to that list that you want to provide. You might as well give them your federal tax returns, your state income tax returns. They can access those and get those anyway, may have already done so. So I like to go ahead and just give those to them early on. Sales and use tax return copies, a lot of times they'll ask for those. Again, something they can get anyway. I'm just going to go ahead and give that to them. Some basic chart of account information. Maybe even just a little bit of GL detail, things that aren't going to give me a lot of heartburn. I want to give to them quickly. And then if there are things that we need to be more strategic about, I will convey to the auditor, hey, we're working on these items. It's not uncommon. One of my sort of strategies in a lot of audits is just delay. And a lot of times I'll delay or come up with reasons why I can't get a hold of some data or a person to get me the data. And because I've already given them enough data to conduct the audit, they'll eventually get to the end of the audit, and they'll either forget about those other elements that I didn't provide, or they won't be as relevant to them anymore. They'll have confidence in what they've got, and they'll just move forward with that assessment. That happens more often than I can convey probably. The other thing that I'll do a lot of times is, again, building rapport with the auditor. I like to engage with the auditor with some technical questions. Try to, even if they're not relevant, they may not have any relevancy whatsoever to my particular situation or that particular audit or client, but it engages the auditor in a way that creates a professional rapport, hopefully. It shows that you admire their ability to know something you don't, and everybody likes to feel important.
All right, so Liz, I think you're up here for the third polling question.
Very good. We'll go ahead and launch that polling question. And this question is, how important is it to you to have yours or your client's sales tax compliance process managed by a single company or partner? So interested to hear from you. And Brian, we'll get back to you because I'm sure there's probably some audience questions and comments you'd like to address.
Yeah, definitely. And Darren had a question that was really kind of on point, Jeff, to the obtaining exemption certificates and XYZ letters. And just, I guess the question is, well, what happens if you can't get those? You know, you've got customers that maybe they're no longer a customer of yours, or maybe they're even out of business. So what do you do there?
Yeah, unfortunately, there's not a lot of options. Again, this is a great question as it relates to the rapport that I've built or trust that I've built with that specific auditor. I think it's safe to say that auditors are using discretion during any audit, and there are obvious company names or transactions that they will look at, and it will be so obvious on the surface of the invoice that this is a resale item. I'm selling 1 million vacuum cleaners to Walmart. Fairly obvious, very sophisticated company, obviously. I probably have an exemption certificate, but the auditor is not very likely to ask for it. They'll just assume you have it. In those scenarios where the auditor does insist on getting an exemption certificate, however, and the company either isn't exempt or is no longer in business, you're likely going to be assessed. But again, I think there's an opportunity, if you build a good relationship with that auditor, to present data or information that may lead the auditor to conclude that, yeah, you know what, in substance, that really was probably an exempt entity or an exempt transaction. And do I really want to make a big deal out of this? Do I really want this to get appealed? It's probably the right thing to just let it go. And those happen more often when you've got that good rapport and good relationship than when you don't. I'm working with an audit right now out of Ohio. Great auditor, really nice guy, good rapport. I got brought in way, way, way after the fact, after the formal assessment had already been issued. And the reality was that during the audit, there was no rapport. They provided almost zero records other than just their pure invoice lists. And the auditor was not getting cooperation. And so in this post-assessment period, which we're going to talk a little bit about in the next slide, it really limited our ability because there wasn't an ability to build the rapport during the audit. And it took a lot of the discretion away from the auditor because now in this assessment appeal process, there's a lot more eyes looking at it, and they aren't able to use as much discretion. So just a couple of examples of that. But yeah, there's not a real easy answer for you. You're probably going to be stuck to some extent on some of those scenarios. Just good luck.
Yeah, appreciate that. And Liz, if you want to go ahead and close the poll there, that would be great.
That sounds good. And it looks like this is very important to a majority, well, important, either very or somewhat to a majority of our audience. So thanks everyone for writing in.
So Jeff, you alluded to the responding to that preliminary assessment a couple of times there. So
yeah. We call it a preliminary assessment here. What I probably more commonly refer to it as the audit work papers. The way audits generally work across all the states is you have an initial meeting with the auditor where you kind of give them an overview of the business and talk about the records and talk about availability of personnel or resources. Eventually, the auditor is looking at data, looking at invoices, and drawing conclusions based on limited information. They know what they can see on the invoice and probably not much less. And so eventually we get to a place where the auditor has kind of done their first run through, let's call it. And it's very common and expected that you'll get an opportunity to receive some work papers. And we would refer to that as the preliminary assessment and give you an opportunity to react to that preliminary assessment or to address and mitigate some of those items. It might be as easy as explaining to the auditor that the item they believe is taxable on a specific invoice or group of invoices is actually an exempt or a product that's excluded from tax in that state. It might be some type of service that doesn't get taxed in that specific state. But from the invoice nomenclature, there's not a real easy way to discern that as an auditor. So they're going to pick up a lot of stuff that is going to otherwise be exempt. And a lot of times they just don't know. And they're going to choose the most conservative option and schedule it in the work papers. So one of the things that happens at this point in time when they're delivering you the work papers is they start to become interested in the time frame. How much time can they give you to look at it? We've got a statute of limitations that's typically running. And to the extent the auditor is going to give you time to work on those work papers, in exchange for that, they're likely to ask for a waiver of the statute of limitations. Very common. Some of the auditors, some of the states, they'll ask for the waivers at the very initial stage of the audit. I tend to ignore those requests for a period of time until it becomes a necessity. I am not against waivers. I sign them all the time, and they're usually appropriate. But it can lead to a sort of drawing out the audit longer than it needs to. So it's just an area that you kind of have to be a little bit strategic with. But you can expect when you receive the work papers, you're probably going to need to execute a waiver. And that just gives you time to work on it so that the auditor doesn't have to turn that audit in as a final assessment. And you really want to avoid the final assessment as long as possible, so long as you have some items that you think you can mitigate. I think it's also important in the work paper exercise to really look at what are the material issues. Don't get hung up on the fact that there's 1,000 items potentially in there. A lot of those items aren't going to be material to you. Identify and categorize your items or your assessment and work papers for the material items and focus on those. This is your opportunity as well to present those exemption certificates that you do have on file or maybe have accumulated during the course of the audit. Again, the XYZ letters, this would be an opportunity to present those. It is okay if you find yourself in difference with the auditor's conclusion, and it's okay to ask them for their statutory support. A lot of times, by providing you with the statutory support or administrative rulings or things like that, sometimes what that does is it turns a light bulb on in your mind to say, oh, this auditor thinks this product is this, and it's really not this. He's relying on a statute that doesn't have any applicability to this product or this service, and there's just confusion and disconnect. So sometimes getting that statutory support helps to bring you back together with the reality. Another thing, if you are going through a basic sample and projection methodology, sometimes you'll see that projection in the work papers, sometimes you won't. You won't see it until the final assessment. But in any case, you usually have an opportunity to evaluate the projection methodology. And historically, when there wasn't statistical sampling, there were a lot of opportunities to mitigate or adjust that projection methodology. Be careful with that. A lot of times early on in the audit process, you're asked to sign a document agreeing to a sample methodology. And so before you sign that agreement, make sure you understand how things are going to get projected. There's a lot of statistical measures that you want to take into consideration, a lot of math associated with that. But I used to always start with the projection when a client would have managed their own audit and then brought me the results. I would say, let me first look at the projection, because I could probably find some really easy low-hanging fruit there. The last thing, you can negotiate. As I said before, this is the stage where you still have the auditor using discretion. And based on the rapport, hopefully you've developed, there's an opportunity to kind of negotiate. When I say negotiate, that can be things like, look, this particular item happened 3 times. It doesn't seem fair that you're going to project that item based on the sample and projection methodology. And there's a number of other things that can come up. So it's an opportunity to negotiate when the auditor still has discretion. They haven't got their boss or their audit review board involved, and they can just decide to leave it out.
So Jeff, I'm going to throw a question at you here from Angela, and there's several pieces to this. I don't know if we'll get to all of them, but in a situation where a vendor has not charged sales tax to you, and you know that they should have charged sales tax to you, who's on the hook if there's an audit? Is it the company that should have charged the sales tax, or is it the company that should have accrued the use tax when the sales tax was not on the invoice?
And Brian knows what the first 2 words are going to be coming out of my mouth. He can go ahead and say them.
It depends.
It depends. Yeah, here's the way I would describe it. There are states where if it's an intrastate transaction, and in an intrastate transaction, the transaction is subject to sales tax, there are certain states where the seller remains responsible for that liability unless you've issued some type of an exemption certificate. In other states, the statutes would allow the state to assess either the seller or the buyer, despite the fact that it might be a sales tax. And if it's a use tax, and when I say a use tax, what I'm differentiating between is a sales tax is typically an intrastate transaction where title passed within the state border. A use tax, whether it be a vendor's use tax or even a consumer's use tax, applies generally when product has crossed state lines or it's an interstate commerce. And in a use tax scenario, either the buyer or the seller can be held responsible for a transaction that's not supported by an exemption certificate.
So I love the "it depends" answer. And that's a plug for our, I guess, our podcast called "It Depends."
There you go.
So we've got a few minutes here. I think we've got 2 more slides and then the final poll question here.
Yeah, I think some of the things we've talked about are going to help move through these last 2 slides a little quickly. But, now that we've gotten through that discussion and mitigation effort directly with the auditor, we're going to receive a final assessment. And that's not the end all. I mean, that's an opportunity to then do something more formal. It might be that you are looking to get a payment plan. You can't afford to pay it all today. There are payment plan opportunities in most of the states. There are even scenarios, if you can show financial circumstances that show that going concern of the business would be in question if you had to pay the audit, there might be settlement opportunities. So that depends on the state. You're going to have to disclose your financial information to get there. More common is just requesting an audit meeting with the supervisor, which is usually the first step in most states' appeal process, is to go first to the audit supervisor and start to work through those issues. If that doesn't result in adequate resolution, you then have a somewhat informal protest hearing. And every state's a little bit different here. So some of these terms are going to be different depending on the state and their policies. The informal protest typically happens with another administrative person outside of that audit office. And they will be able to pull from some of the experiences that the state has managed across a broader set of taxpayers. These states really don't want these things going to court and precedent being set that doesn't appeal to them. And so they'll sometimes settle issues with taxpayers that are somewhat gray or have their vested interest in mind. It can then become a formal hearing, and sometimes that's with a board or a group of administrative personnel. Again, every state's just a little bit different in what the formal appeal process looks like. But when you get to that formal appeal, you're likely engaging a third party, whether it be a consultant or an attorney. You probably want one or the other representing you when you get to that formal level, if you haven't already engaged somebody prior to that. And then obviously, if you have an appeal to the courts, you're going to have an attorney that's going to represent you at that point. I didn't tell a whole lot of stories here, and before this last slide, I'll tell you one. It was a personal experience we had. We were auditing a very, very large, well-known company that's internationally known, and we made an assessment, very large assessment for at the time. This was in the early 90s, so it was $1 million assessment on this one specific item. And this company went and ended up hiring the law firm of which the current governor was a member or former member. And they went to the legislature and had the law changed retroactively to eliminate that assessment. So there are some wild things that have happened or that I've seen happen along the way, relative to appeals. And there can be some success that's had at those levels. The last thing, we've talked and hinted around this most of the day here today. What should you be doing today? I think I said it at the very beginning. You don't want to say to yourself, I'm going to get audited tomorrow, but you have to operate as if you're going to get an audit, and you just don't know when or who or how it's going to evolve. And so all you can do is be prepared and do the best job you can to comply. It's important to make sure your sales tax account is reconciled monthly. Make sure it does not get out of whack. The last thing you want to be doing is collecting tax or charging and collecting tax, having it sit in your GL and not get reported or remitted. That is the worst potential case to be in. That's basically a form of embezzlement, and that can have serious consequences. Otherwise, it's really a matter of making sure your invoices they look correct. I say look correct because the sales tax is as much a form over substance tax as it is substance over form. It's probably more form over substance. And so the way an invoice reads, the way things are projected on the invoice or in the contracts can influence the auditor and really position the transaction in a favorable light from a tax perspective. Get your data in place and maintained. That goes for exemption certificates as well as any kind of credits. It's very common when you think of a store like a Walmart, there's a ton of people walking in every day and returning items. Walmart's capturing those returns. They're taking credits and absorbing those credits on their sales tax returns. You just want to make sure if you are operating in that kind of a fashion where you get a lot of returns, that you can associate the return and the credit back to the original document. And you also have to be mindful of the statute of limitations. If the transaction on which the tax was charged is 3 years or older, you likely have lost the opportunity to reclaim that credit. So I think really it's about buttoning up, be confident in your process, have good documentation, and I wouldn't be afraid of an audit in those circumstances.
All right, very good. So Liz, we got the last question up here, or the last poll, I should say.
All right, that sounds great. We'll go ahead and launch the final polling question. And as promised, Jeff and Brian, you did deliver an action-packed session. You always get incredible audience participation. Thank you for our audience questions and comments. And so many great stories and things to think about and warnings and helpful tips, and it goes fast. So this is our final polling question. If you would like to learn more about the services that TaxConnex offers, please go ahead and let us know. This is a way we want to make it easy for you for outreach. Maybe you would like to have more connection in the future. Follow and connect on LinkedIn. I linked the podcast It Depends in the comments. That is a perfect name for the podcast. If you're here for education, that's great. I think we start the relationship with education, and as more questions come up and as needs present themselves, you know who your resources are. So thanks, everyone. We'll leave the polling question open for a few more seconds. And Brian, do you have another question or comment you'd like to address before we close?
Yeah, I'll just do kind of a quick question here. It was one that was posed early in the presentation, but it just talks about the complexity of sales tax, and I found this interesting. And the question was, is there any effort being made to simplify sales tax to better help taxpayers manage the escalating challenge? And it's a great question. And I kind of laugh about it because when I first got into this industry about 25 years ago, there was all kinds of talk about sales tax simplification. And that goes back even probably another 10 or 15 years prior to me getting in the industry. But at the time, it was I think it was the SSTP that was in place. And so there have been some efforts to streamline this over the years. We've become a little bit cynical about it, just from the perspective that it seems like anything the states try to do to simplify it actually adds complexity to it. There are, 23 states that
24 now.
24 states that are in this streamlined sales tax program, which it has made it a little bit easier in those states to comply, but they tend to be the smaller states where tends to be less revenue, less sales activity. It's not the California, New York, Texas, Illinois, or Florida scenarios. And then we just see the increasing complexity, even with Wayfair, where it tends to be kind of black and white in terms of whether you have Nexus or not, you still have the old physical presence standards to deal with. So unfortunately for you on your end trying to manage this, I don't see it getting really any easier for you. So definitely appreciate the questions and the interaction. And with that, we'll go ahead and wrap up, and hopefully we'll see you again in the future. Thanks, everybody.
Yeah, that sounds great. Thank you so much. We're on about an every other month cadence. So check incorsa.com for TaxConnex next webinar. Really appreciate everything you both are doing and your team that supports you and makes these webinars possible. And again, thank you to our audience. The quick close, want to let you all know you can access your CPE certificate directly from your Incorsa dashboard. That will populate in 1 hour. The handouts will be uploaded for you as well, and later on we'll upload the recording. So if you want to listen back through, share it with your team, you are welcome to do so. So thanks everyone for joining us. Please take a quick moment to complete the survey. When you close, go to webinar, and we'll look forward to having you back with us again very soon. Take care.